Today I'm going to do a very short video introducing the financial year-end procedure. If you look at a financial year for a business, the business usually runs their financial year from the 1st of March right through to the 28th of February the following year. And the reason why the business uses this financial year, and which ends on the 28th of February, first of all is because that coincides with the tax year. In other words, SARS is going to charge tax on profit made by companies from the 1st of March 2024 to the 28th of February 2025. To make it simpler then, the business runs the same financial year, because then they are going to be recording profits for the same financial period that SARS is charging tax on. And then there is another reason, and that is it's quite difficult to use the 31st of December, in other words, a calendar year end, because over the festive season, it's obviously a very busy time of the year. A lot of employees also take leave during that time. So that is why the 20th of February is the usual year end for most businesses. Now, if you look at what happens during this financial year, on a monthly basis, source documents will get completed to report transactions. Those get recorded in journals. The journals get posted to the ledger, and then you do a trial balance to check the double entry that you've done your ledger correctly. So every month you're going to do that procedure. So by the time you get to the end of the financial year, the 20th of February, the trial balance that you're going to have here is going to contain a summary of income and expenses that have actually been received or paid. Now we're going to call this trial balance a pre-adjustment trial balance. If something is pre, it means before. So the numbers in this trial balance, the amounts in the trial balance here, will represent what you have actually received or paid. Now let me give you an example. Let's say rent is 1,000 Rand a month, and you have paid rent for 13 months. In the trial balance, you're going to have recorded rent of 13 months times 1,000, which is 13,000. That is the amount that's actually been paid. When we are doing this work, we want to work out what should have been paid. So if your financial year is supposed to be for 12 months, we've actually paid 13, we need to make an adjustment. And adjustments, we go in a lot of detail. There's a whole lot of adjustments you need to know. All I want you to understand now is that in this trial balance here, the amounts that are recorded are the amounts that have actually been received or paid. Once I've completed this financial year end procedure, I'm going to record the amounts that should have been paid or should have been received for income and expenses. So we are going to need to make adjustments. Now, if you think about a nominal section in the ledger, if you just look at the ledger, and I say to you, how much profit did you make? You're not going to be able to tell me by just looking in the ledger. So therefore, we're going to have to do something called closing transfers. And the amounts that are going to get closed off are going to be the amounts that should have been paid or received. So if I use that rent example that I used just now, in the pre-adjustment trial balance, we had 13,000 because we paid for 13 months, 1,000 Rand a month. After you've done closing transfers, the amount that you've closed off here will actually be 12,000. That is the amount that should have been paid. Now, after you do adjustments and closing transfers, at each stage you would post to the ledger and do another trial balance. This is just a summary though of what takes place. Now, when I do this section of work, I actually start with closing transfers first. So I'm going to, in my next video, go through what closing transfers are and how you do them. And there's a reason for that, and that is because you need to understand what is meant by closing off an account, because then it makes adjustments. When the adjustments are being explained, it makes it easier if you can just refer to closing off an account. What we are ending up trying to follow then, and this is an incredibly important rule in accounting, and that is your matching rule. We want to make sure that the amounts we record Once we finish with adjustments and closing transfers are the amounts that should have been paid or received for this financial year. So you'll see here, I've put a plus here. Anything that fits in this financial year will get added. If you paid or received something from last year or for next year, those will get subtracted. So the trial balance here has got everything that's paid or received. It doesn't care whether it's for last year, this year, or next year. We make adjustments so that when we close off the accounts, we are closing off the income and expenses that should have been paid or received, so that we can compare those income and expenses for the same financial year to calculate profit or loss for that same financial year. Okay, so that was just a very brief overview. As I said, in the next video, I will go through closing transfers in detail. Thanks.